Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. It's time to get in a corporate conversations. Insecticides India reported a weak set of Q1 numbers. In its post-earnings conference call, the company indicated that its generic segment witnessed a price war due to the impact of Chinese players. The management also said the spillover of inventory from the previous year weighed down margins. That said, how is demand panning out in the rest of the year? To discuss business outlook for Q2 and more, we are joined by Managing Director of the company Insecticides India, Mr. Rajesh Aggarwal is joining us now. Mr. Aggarwal, thank you so much for joining us. Q1 was weak across the agrochemical industry, but give us a sense of how Q2 has panned out so far, especially because your exposure is largely to the domestic markets. We've seen August being in deficit when it comes to the rainfall picture. How has demand been like, and what is the outlook going forward?
Okay, I would start with Q2. July has been a wonderful month. We have seen all-time highest sales in the month of July, and also all-time highest collection in a single month in this July. And I believe August is not very far. Though, yes, you are correct in saying that the rains has been little on the lower side, but a reasonable rainfall has been absorbed across the country. The sprays are on. Yes, people are needing more rainfall in many parts of the country, but still, like if I compare with the previous 3 years, then demand in the August is also much better than the previous years. And I believe that August as a month should also be a very good month with a high volume of sales and reasonable collections going ahead.
So, how much better has this August been compared to, say, the last 3 years? And what about the month of July? Was July also as strong?
July was our strongest, actually, all-time strongest month.
Okay.
So I don't want to share numbers, but on the gross level, yeah, it has been a good growth year-on-year basis. And this year also, like we wish to grow at a CAGR of about 20%. And I can just say that August so far has been much better than that.
So your guidance for the full year is 10 to 12%, right? Do you think there is a case for you to beat that, considering that July and August have been best ever months for you?
Yeah, there is a possibility that we'll beat our guidance of 12%.
Mr. Aggarwal, you're sounding optimistic at a time when most of the agrochemical companies globally and the other big names in the industry in India itself, they have cautioned and said recovery can be seen only from second half. So just some points I wanted to understand from you. One, where are we when it comes to the inventory picture? You had spoken about higher cost of inventory, which impacted margins in Q1. So first question is on the inventory side. And second, on this price competition in the industry because of dumping by Chinese goods, especially in the generic segment. Is that something which is cooling down as well?
Yeah, that had a big impact on the industry. And we also got very badly affected, very badly hit by that, I would say. What has happened is like after the corona, the prices started going up and they were at the peak in the last fiscal and they started coming down from October, November, December, which had a big impact in our last quarter and also on our first quarter. But slowly those inventories are moving out actually, and it is being replaced by the fresh inventories. And most part of the inventories we are able to dilute. If I talk about on absolute basis, my inventory on 31st March was 800 crore plus. It has come down to 600 crore plus, though the fresh buying from January till now is also the part of this inventory, which means that most of the inventories, I can say, in terms of percentage, if I have to say, then I will say major part, more than 80% of my previous inventory is already washed off, and it is mostly the current inventories. And this inventories also we are controlling at a level so that we don't go as high as we went in the past actually. So we are controlling these, and sales are good. So I am very optimistic, and particularly here I would like to say that India sales are very good. And in the last 2-3 years, we have launched a lot of molecules which were going to the market. They were exceptionally well. But this year, we got a full chance to work in the field because after Corona, there was full time for the team to move to the markets and establish these products. And we have got very good results. And there are also certain launches which have happened during this year. And there are further more things lined up. So I'm very optimistic that India's story is going to be a good story. And we have launched many products and we are getting very good success from all these new products which have come in the last few years and which are being launched now.
But sir, you said that 80% of the high cost inventory has been written off so far. You still have 20% left on your books, right? Of the high cost inventory.
Yes, some percentage, yes, 20%, not exact, but yes, there will be something which will move on according to the seasonal conditions.
Okay, but will you write it off? Take a hit on your inventory in the current quarter in Q2?
Like write-off means ki MTM writing off is always there. So according to the market, the MTM losses are already booked in quarter 1 also. They were also booked in the last quarter. And if yes, there will be something which will be higher than the market prices, it will be written off in this quarter also.
Okay, that has to be done as per the accounting norms. That's about the India business. But you spoke about going ahead with some registrations, around 300 product registrations in the export markets. Now, these registrations also come at a higher cost. It's not easy to just go ahead and do a product registration because somewhere it does get costly. What's your idea with the export market? And if you do register these products, what will the impact on your margins be?
We have very successfully got about 300 registrations across the world so far, and almost similar number of more products are in process. So when I say registrations means in different countries actually, because we we have a set of data. That data we are giving to different countries according to their guidelines, and we are bagging these registrations. So we started this process almost a decade back, and we have been continuously investing in deriving more and more data for the technicals, because today only we have a data of more than 10 technicals, more than 35 odd formulations. We have complete sets which are going to various countries, and we are continuously investing in this and increasing the number of formulations also and number of technicals also for this data regularly. And since this expense is getting regular, means every year we invest on 2 to 3 technicals data registration, every year we invest on a few formulation registration, so it gets set off year on year basis, and we get the advantage in the market. So now world is looking at China plus one, Europe one plus strategies. So this gives the big opportunity to India. I believe that currently, yes, the international scenario was very bad. Why? Because this the price drop from China has impacted the entire world, and then the monsoon situation, what we see in India is little improved. When I say little improved, because of western disturbance, there were a lot of rains in our country, which has kept the agriculture going. But other parts of the world were not that lucky, particularly Europe, Africa, and also America, North and South America included. So there this demand pattern at the moment is a little slow, but their inventories are moving in the market. So I see that in the second half, the international markets are also going to pick up, and we should also grow in our international business.
Okay. All right, Mr. Aggarwal, thank you so much for joining us. So that's the word coming in from Insecticides India. The stock has actually shot up to the day's high after management commentary, where they are saying there's a possibility that they will beat their FY24 revenue guidance of 12%. Actually, it's up 2.5%, but still has come off from the high level of the day as well. We'll do one thing, slip into a short break. When we come back, we have our special segment, Midcap Spotlight.